Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you as always.
Mike, we have U.S. inflation now running at a 40-year high. What kind of reaction are we seeing from the stock markets and from industry in general?
Well, once again, this is something happening we were told was not going to happen. A year ago at this time, the Federal Reserve was saying there would be springtime inflation and then it would go away. And of course it didn't go away. And that became clear by November, and we started to record these record 40-year highs in annualized inflation. And in December, we were kind of told that's not going to happen again. The rate of inflation would be slowing down by now, and obviously, with today's news, that has not been the case. And it's interesting when you chart it out because it looks like a breakout. I mean, it's not simply that it's at a 40-year high, but it looks like a move that's the start of sustainable inflation, not like this is a surge of inflation after a couple years of higher inflation. And I don't think that should be too surprising because in 2020, in the spring, when the Federal Reserve lowered rates to zero, we saw a secular low in oil, energy, and commodity prices across the board, which some of them had been in bear markets for 10 years. So when you end a 10-year bear market, in something such as agriculture commodities, in oil prices, you're going to typically see the prices go up, for years to follow. And it's also, I think, shouldn't be too shocking when you had zero rates, all the quantitative easing operations were still at zero rates. We haven't even started to raise them yet. And, the last time we saw interest rates go super low, it was in response to the 2008 stock market decline and the 2000 decline and so forth. So, we're not in the type of macro environment we were in the last, 12 years, let's say from 2010 to 2020. Now, as far as your question, how's this impacting the markets? This is just one day's news. It's not having I don't think a huge impact today, but I think the most significant place where you could say it is in the bond market. The 10-year treasury bond in the United States crossed over 2% today, and bonds they trade opposite to yields. So when yields go up, bonds go down. And when the Fed made rates zero in 2020, we saw, a secular peak in the value of bonds that's probably going to be there for the rest of our lives. And that means from then till now, or the next couple of years at least, we're looking, I believe, for further decline in bond prices and the value of bond funds, a rise in yields that hasn't even begun. That's going to mean a bear market in bonds. And I think that's one of the biggest things that's going to impact all the financial markets. And that typical, regular, just average person and that's invested in the markets, not trying to trade, not trying to do anything real risky, because most people have anywhere from 40 to 60% of their money invested in bonds as a so-called safe haven, and they need alternatives. And I think gold, silver will be eventually be that place, but few people are making that move yet.
Oil is over $90 a barrel. Is that kind of trend going to continue?
Well, the biggest thing about the energy trend is seasonally, energy prices would take a decline from July till about January and then rise into the summer driving season. And last year that didn't happen. That seasonal, fairly consistent trend did not occur as energy prices continued up from July to November. And now, as you just mentioned, we're going up again. And I think that's just an indication of how powerful the underlying bullish trend is for oil and other commodities across the board. And I don't see that ending anytime soon. In fact, I would suggest that the energy stocks remain among the best places to invest in the stock market. You know, while the NASDAQ took its biggest January decline ever, energy stocks went up more than 10%. Exxon, for example, which I do have a position in, opened the year around 60, and it's at 78 today. That's a pretty big move, you know, when most things decline.
Is one of the reasons why energy is going up? Well, maybe there's a number of factors. We have Russia, Ukraine, maybe supplies. When there's conflict, you may see oil supplies cut. But also, as things reopen, people are going places and attending events and demanding certain things to be shipped to them, and that takes energy.
Yeah, I think all those factors are definitely playing a role for sure. But, you know, you combine them all into the chart, and I think that's the easiest way to see what's happening. I can't, you know, disconnect each one of those trends and figure out which is the most important one. But when you're in a bullish trend, what tends to happen is any news is used as a reason for people to buy. You know, they look for reasons to believe that the trend will continue until, you know, it ends, then goes lower enough that they end that belief system. I mean, we see that, for example, with, let's say that in 2020, there are all these fad stocks like Zoom and, social media stocks. We said we're trapped inside our houses, and they all went up. And people, you were saying Zoom is the future. Now, you know, Zoom is going down, and the stock is. It's 140 abouts, and it was at 400 in July, and now no one's talking about that or thinking about that as the future at all.
Mm-hmm. Now, the International Energy Agency says there's a lack of investment in oil and gas exploration. It's going to be some while before we get into EVs, and even if you wanted an electric car today, you can't get one shipped to you because of this chip shortage. So gasoline-powered cars are going to be around for quite some time, and yet we're not exploring for oil and gas for them anymore. Is that going to see the price of oil hit $200 a barrel?
Well, I definitely think that could be actually that could be what you're mentioning here. The most significant underlying bullish factor for oil is the fact that, you know, there was huge cutbacks in the investment of energy, you know, more drilling, more refining, more discoveries in the energy market period, because we had a big bear market that started around 2014, lasted several years. I mean, the American oil shale industry that was all talked about 12 years ago is now, still a shell of what it was back then. So there's a lot less, supply than in potential immediate supply coming onto the market. And, like the electric vehicles are not going to replace the need for using oil anytime soon. It's turning out, I think, to be, wildly optimistic what people were imagining, these cars were the impact they would have.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's going on with gold?
Well, I think, if I recall correctly, on your last show, I was saying that I believe gold and silver are the single best trades to make now as far as having an entry point with good upside potential. And I still have that same view because while I am and remain very bullish on, energy and other commodities, in fact, you can look at the CRB index. It just made a new high yesterday, a closing high, a new intraday high today, whereas the ARC ETF, made a new low just the other week. Zoom made a new low the other week. Many stocks, Facebook has had a crash since we last spoke. So many of the fad plays are basically over with. And energy commodities is the strongest thing in the markets. But gold and silver have not yet taken off, and you can still get in with a good entry point. You could buy gold, as we're speaking now, around 1830, and put a stop loss order at 1775 or 1780, and that's a fairly low risk entry point. And what we're all waiting on in the gold market is for a move probably up to 1880 to get more people wanting to buy and buy mining stocks and fuel the next rally. Because what you really need is not simply people that say, okay, I believe in this trend, I'm going to invest and put my money here because I think it's going to pay off. You need the chasers to come in. And they're not going to do that until it does go up to like 1880 or so. And then the chasers, as long as the price is moving up, they just keep buying and buying and buying. And they tend to fuel huge rallies. In gold, it's been consolidating in silver for so long in such a narrow range that when it does break out, I think we're going to have an enormous move. One big up leg that's likely to last 12 months, or even longer before a significant pause. So that potential move, with the entry point now is the thing I'm most excited about in the market, even though, at the moment, the prices don't appear to be moving very much. Very few people are paying attention. It is what I believe is, the sleeping giant now in the financial markets is the precious metals.
What about the junior miners? Are they part of that gold picture?
Well, I think, definitely, but what's going on with the junior miners is also, at the moment, and I own several when I say this, is an example of the lack of interest at the moment in gold, silver, the mining stock space. 'Cause typically the junior miners actually tend to rally in January. Often they'll have tax loss selling in December unless they're just exploding that month, or people are taking profits that month. And then that selling kind of ends so that the bulls take charge in January. You can get fairly powerful rallies in junior mining stocks, but most of the junior mining stocks I follow, didn't really rally in January. I haven't run the numbers, but I wouldn't be surprised if it was one of the weaker Januaries for the junior mining stocks there's been in the past several years. And I think that's happened because gold, silver aren't really moving. People are just falling asleep. So the retail people are kind of not in the market. But the way the precious metal market tends to work is the big cap mining stocks, such as Newmont, tend to go up first on a rally, and then money will start to trickle in to the juniors, and they'll catch up with the performance of the big caps and surpass it. So I think that's probably, the scenario we're headed for this year. And really, it's time to accumulate them or take positions in them if you're not in any, in my view.
What about copper?
Well, copper looks great. It's acting a little better than gold and silver, just like other commodities are at the moment. But it's positioned for a breakout too. It's still consolidating in a range with around 470 or so being resistance. And the fact that copper is not like below the 200-day moving average or in decline is also a bullish sign for the commodity complex in general, because typically copper prices decline first before the whole, the CRB index does. So, which obviously isn't happening right now.
Now, in the automotive sector, we still have a chip shortage, and now we're getting cross-border tie-ups with protests on the Canadian side by truckers, and that affects auto production because it's all same-day supply chain between Canada and the U.S. Apparently, a typical car goes back and forth across the border 7 times before it's delivered somewhere.
Yeah, it's causing headlines today that some of the American auto factory plants may have to lay people off all because of this. And I don't know, you know better than I would when these protests are going to end. I mean, I have no idea what the story is of that.
No sign of them ending. They're just increasing. Now the major border crossing between Manitoba and Minnesota, North Dakota has been blocked.
Wow, it's just pretty amazing. And this is a story that didn't reach the American media at all until just a few days ago.
Most of the funding apparently is coming from the U.S. for the protesters.
That's interesting.
So you may start seeing, and there's now trucker protests in France where they're flying Canadian flags. And how long before we see that in the U.S.?
Yeah, it could happen.
Or do you think vaccine mandates in the U.S. are disappearing fast enough that truckers don't feel a need to do it? Or you don't know?
Yeah, that. Yeah, I don't think truckers in the United States are gonna protest the vaccine mandates here. Except for hospital staff, have barely been enforced. I mean, they were talking about letting people go in the military who wouldn't take the vaccines, but they just started to give people some religious exemptions. So it looks like, it's going to, the requirements might go away there.
Mm-hmm. Any other trends we should be keeping an eye on right now?
Well, when it comes to U.S. stock market, we did see this slide in January, and then the past few weeks, 2 or 3 weeks, a rebound. The S&P is trading right on its 150-day moving average, but so much stuff is just broken down. I really think the bull trend is pretty much over with. That said, I don't think the market's on the verge of a huge decline. In the short term, it looks to me like we're more likely to just drift around, but I think there's very limited upside in the U.S. stock market for the rest of this year.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.